Joining me on the line to discuss the state of the Brazilian economy and the future outlook is Juan Ruiz, Chief Economist for South America at BBVA Research in Madrid. Now, Brazil's central bank raised interest rates by 1% today in a bid to get inflation under control. What does this rate increase mean for the economy in the short term, and do you think this will be the last hike this year?
On the first question, this means for the economy, of course, a further drag on growth, but this is, in our view, fully justified because inflation has been running very high, much higher than the central bank target. So in the short run, this will continue to try to put a brake on inflation. Of course, it will have a cost in terms of growth, further dragging economic growth in Brazil. But we think that one of the problems in terms of economic policy in Brazil is credibility. And one of the areas in which credibility needed to get recovered in some sense was monetary policy. So we think this is positive for the long run, in the sense that it will bring back credibility to macro policies. Your second question is whether this will be the last hike in the year. We think yes. We expected that before this raise. We actually predicted that this was going to be the last rate hike for the year, although some market participants expected further hikes. But we think this is it for 2015 and even the beginning of 2016. We expect rate cuts in Q2 2016 when inflation abates, but we think this is it for this year.
S&P's rating agency warned that they are considering downgrading Brazil's credit rating by one notch to junk. Would this downgrade give policymakers a push to rethink economic reforms in order to revive growth? How do you see this scenario playing out?
I think we need to distinguish here between structural reforms and what the government is trying to do right now, which is trying to bring back credibility for macro policies, for fiscal and monetary policies. I don't think we are expecting any push for structural reforms. I think the government is going to try to push what is urgent right now, which is the recovery of credibility for fiscal and monetary policy. I think the downgrade, of course, is going to give policymakers a further incentive to go into that direction. But of course, as you know, in Brazil, the scenario is a little more complicated than that, because the political landscape is not fully aligned for that change. I mean, the executive branch is and the Ministry of Finance and the central bank is pushing for those reforms on the macro policies, but Congress is a little bit opposed or is not fully aligned with that. We think that the risk of a downgrade for Brazil might put some pressure in Congress to approve the measures especially the fiscal side. But then again, I mean, it's not completely sure. I mean, this might give Congress a further incentive to align with the executive, but then again, it might not.
Now, how has the Brazilian real fared ahead of the interest rate decision, and what is your outlook for the dollar real over the next 6 months?
The real has been depreciated ahead of this decision, but I don't think that the interest rate decision played a major role in the depreciation of the real that we saw previously in the last weeks. I think there were other drivers like the falling commodity prices, all the volatility that we saw in China, and the doubts about growth prospects in China. Also, the change in fiscal targets was also an important driver in the depreciation of the real, and of course all the political noise that you have currently in Brazil. I think those four elements were much more important in terms of the depreciation of the real in the last month, couple of weeks, more than the interest rate decision. Now, going forward, we think that there might be some, at this point, there might be some overshooting on the real. We foresee some stability or even some slight degree of appreciation of the real in the run-up to the end of this year. So we have the real right now at about 333. We're expecting about 334, 335 at the end of this year. But we think in 2016 we will retake the depreciation of the real, and we are expecting around 350 by the end of 2016. I think next year there will be two drivers of that depreciation of the real. One is, of course, the decoupling from the Fed. Fed raising interest rates in 2016, while in Brazil we'll have probably a rate cut in Q2. And also, and I think more importantly, as I mentioned before, there are some structural reforms that are pending in Brazil, and one is to try to increase competitiveness in the industrial, in the export sector in Brazil. That's something that is not being done, and I think it will wait on the exchange rate next year.
Juan, thank you very much for your insight. My colleagues and myself will be back throughout the day with more news and analysis, so do click back. For now though, it's goodbye.